Hi there, welcome back to my series of trading strategies. This week I will not discuss a new strategy but something that should be an integral part of every strategy: position sizing. Now, what is position sizing? Position sizing is what answers the question of how much or the quantity. When you enter a trade, how many stocks should you buy or how many units should you buy or sell is defined by position sizing. There are many ways to position size, but in this video, we will discuss my favorite method, the one that I use for my trades. You can call this method fixed risk percent per trade. So in this Excel, I'll show you some basic calculations about how I calculate the position sizing. First, I will show you a method of using with stocks because stocks are a bit simpler. You do not have a concept of lots in stocks. Then we'll check out how we do it in futures because in futures you have a lot sizes, so the calculation gets a little bit more complex. Not really complex, just a little bit more. So say you have a stock of in which you want to make an entry at the price of 100, and say the stop loss for the same stock that you want to keep is 90 rupees. So which gives you a risk per unit of for this trade is going to be 10 bucks. Now say you have a capital of 2 lakhs and your risk that you want to the risk that you want to take per trade in your system is say 2%. So that comes down to that's come to 4,000 rupees. So now the calculation for this becomes very simple. All you need to do is that you need to divide your risk per trade by risk per unit to find out the exact quantity that you can buy. So your risk per trade is 4,000 and your risk per unit is 10. So if you divide that, you get 400. So 400 is the quantity that you can buy. Now, if there is another catch here, so if you try to buy 400 quantity and your capital is 2 lakhs and the entry is 100, so for to buy 400 quantity, you will need something like 400 into 100, so which is like 40,000 rupees. So you are still left with 1 lakh 60,000. So the problem that a lot of people, not exactly the problem, but the mistake that a lot of people do is that they uh, go all in. So if they have a capital of 2 lakhs and if they think that their entry is 100 bucks, they will just go for a quantity of 2,000. That is the max amount that their capital can afford. And this is something that leads to disaster because if you go with the entire capital and buy 2,000 quantity, you will end up risking around 8% in a trade, and that is a very high risk. Technically, we should try to limit our risk as low as possible. So, this is with the stocks. Now, we'll do the same thing with index. Say, suppose I want to enter Nifty, and the price that I want to enter Nifty is something 9672, and say the stop loss for Nifty that I want to keep is 19568. So this make gives me a risk per unit as 104. Now suppose I have a capital of 10 lakhs and the risk per trade is again 2%. So that will give me 20,000 is the amount that I want to risk per trade. Now my risk per unit is 104 that we have already defined, and my lot size is 50. So this makes my risk per lot to be 5,200. 5,200. So this is a very simple calculation. So you can very just by looking at it, you can make out that if total risk is 20,000 and risk per lot is 5,200. So either I can go for three lots, which will be a little less than my risk, or I can go for four lots, which will be a little more than my risk. So if I go for three lots, I will be risking around 15,600. If I go for four lots, I'll be risking around 20,800. Since in mechanical generally we do not like these kind of discussions to be made ourselves, so it is better that we always decide it beforehand that do we want to exceed or go below our risk. So I prefer generally going below the risk. So if you want to do that, the calculation for that also again becomes very simple. What you need to do is you need to divide your risk per trade by your risk per lot, and then you need to floor it. We are using floor because we want to go for a risk that is less. If you want to go for a risk that is higher, you can seal it. So this shows us three lots. So three lots means 150 quantity. So with a capital of 10 lakhs, with a risk per trade of 20,000 and with a risk per unit of 104, I would go for three lots in this kind of a system. Now the stop loss is something a mistake that a lot of people make is that they change the stop loss based on the risk. So say my stop loss was here 568, and which was giving me a risk per unit of 104. Now somebody wants to trade four lots, so what they will do is that or five lots. What they will do is that they'll keep the risk per trade same, and they will just change the stop loss to a closure value with the entry, which will again keep my risk same. But the problem is here is that you are changing your stop loss, which you shouldn't be. Your stop loss is a part of a system which defines when your setup is now wrong. So your exit should be only then. If you move your stop loss closer to entry just to reduce your risk, you are making a grave mistake because the setup has not changed. Your stop loss hits and you are out of the trade. And then you will see it again going back in your direction, and that will leave you with a lot of regret. So, yep, this is how I calculate my position sizing. Let me know what are your thoughts on it, and please do not forget to subscribe to this channel. Thank you.